Hello and welcome. You're watching BTTV. This is Market Today. I'm Tanya Aneja and with me is Shail Bhatnagar, our markets editor. Well, it's a fresh Monday morning and this is going to be an important week from the domestic point of view as the RBI is set to announce its interest rate decision. So we'll get to you all the latest market updates right here. But first up, the top headlines for you. Indian bulls are likely to regain command at the Lal Street after last week's rest that saw foreigner funds turn net sellers on a weekly basis for the first time since mid-April. First quarter earnings will decide sentiment in a market consolidating near record highs. And all eyes will be on the central bank this week as the Reserve Bank of India girds up for its monetary policy meet. Rates are likely to remain steady, say analysts. Very good morning, Shell. It's a fresh Monday morning, and if we talk about Friday, the nice bounce back, we're taking support, at 19,300 and coming back above 19,500 was a relief rally for the markets after, the recent correction. But now the question is that will the bulls regain, control of the Lal Street this week? So where do you see Nifty and what should be the strategy at this point in time?
Good morning, Tanya, and good morning, everybody who's watching us. It's a bright Monday morning. It's a fresh start to a week. And last week, we had a bit of a rest when it comes to the Nifty. You'll see the daily chart right in front of you. And it was an exciting session on Friday, Tanya. After 3 days of losses, which is Tuesday, Wednesday, and Thursday, we had a nice uptick on Friday. And the index touched a high of about 19,543. The close was 517. And if you see the GIFT Nifty, we are looking to open, some 30 to 50 points higher. So my understanding is that Friday's pent-up buying will again resurface on Monday, and we should see bulls on the front foot. But not all is well when you look at the insides of Nifty. We've seen the Nifty slip below 20 DMA last week, and yesterday's, that is Friday's high, was exactly at 20 DMA, 19,543. So that basically means that this level, which was a very long-term support, will now act as a resistance. And you very rightly mentioned in your first comments that this week the cues will be decided by RBI's monetary policy, which is on Thursday. So there will be actually triple witching on Thursday. We have the weekly expiry, we have the RBI monetary policy, and we have the US inflation data. But coming back to Nifty, last week we saw 0.7% fall in the Nifty, and that's how it is. If you look at the Nifty option chain, you have a very strong support at 19,400 and 19,500. Lots and lots of put writing support coming in here. And similarly, when you see call writers, they have put in a resistance at 19,700. So the first thing to overcome would be 19,543, which should be a gap up. So that will be covered. Then we are looking at 19,700. But the fact remains, Tanya, that it's a weak index that is there. We've seen the Nifty slipping in 5 out of the previous 7 sessions, and last week it had its lowest level since July 7th. So the other point that you mentioned was that foreigners are net sellers. Last week they sold something like 3,500 crores. Remember, this is the first net weekly sale since April 17th. So this is a bit worrisome, but it's a buy on dip still. So if you see an intraday dip, buy towards maybe the first resistance or the second resistance. We'll take a call when the market opens. But in terms of heavyweights, it's a bit of a problem as far as the Nifty is concerned. I checked out the advanced decline ratio for all of last week, and 32 out of 50 stocks on the Nifty ended in the ended in the red, Tanya. So that's a bit worrisome, but then we'll see. There's a lot of action happening outside the index, whether it's railway stocks, PSU banks, now pharma is coming up pretty well. So all those should enthuse the bulls. As far as Nifty is concerned, it's still buy on dip, but let's see whether it takes out the 200-day DMA today or not. Tanya.
Okay, lots happening and we'll keep an eye on that. But let's talk about Bank Nifty also, Shail. I mean, on Friday, Bank Nifty also rebounded after a 3-day correction, and it rose around 366 points to 44,880. So is this pullback, gonna sustain going forward? What are you looking as far as Nifty Bank is concerned?
So, simply and mathematically, Tanya, Bank Nifty is weaker than Nifty, and the Nifty is actually weaker than what it was 2 weeks ago. So this is the second week of continuous losses on the Bank Nifty. We've given up somewhere like 600 points last week, and about 1.3% lower this week, 1.3% lower the previous week. So over the last 2 weeks, there is something like 1800 points which the Bank Nifty has given back to the market. So the peak was 46,370 on July 21st, and we are at the moment at 44,880. So about 1800, 1850 points is what the market has taken back from Bank Nifty. Now the problem is that if you look at frontline stocks, SBI came up with possibly the best quarter ever, and the stock is at 200 DM. It actually fell very sharply. So none of the good news, whether it is by ICICI Bank, Axis Bank, SBI, HDFC Bank, all these earnings have been fantastic and they've hit the ball out of the park, but the sentiment is not keeping pace with what the first quarter earnings is. So Bank Nifty again is looking weaker, and just as I had mentioned that Nifty's tested 20 EMA, Bank Nifty is actually somewhere around 50 EMA and at 28th of June lows. So that's a bit worrisome. The trading range is somewhere like 44,300 to 400. That is where you see a lot of put support, and 45,000 is where the call resistance is in terms of options. Tanya.
Okay, absolutely. That was Nifty Bank for you. And Shail, what about FNO space? Because I think lots happening there as well. So what are you looking at in the FNO space today?
So Tanya, this is the buoyant part of the market which I really want to discuss in detail. So in terms of bullish sectors, there are three. Let me name them: pharma, pharma, and pharma. So it's just as what public sector banking was about two months ago. We are in the same boat when it comes to pharma, and two very strong news driving it. One is of course the potential buyout on Cipla. The stock is already at a record high and on the list of stocks that I am tracking. Very, very strong numbers coming in on Friday. 3.5% rise in the stock price, 12.10. Remember, this is a record high. And given the pending transaction, if other media reports are to be believed, the delivery statistics are improving dramatically. 1.9x delivery on Friday compared with Thursday. As also the fact that even at record levels and at such gap ups with such strong percentage rise in terms of price, the open interest is rising dramatically. That shows that bulls are really, really very confident here. So the open interest was up 8%. Apart from Cipla, you have seen very, very strong traction coming into Lupin. That's again I'm looking at, although the stocks run up dramatically, but 10% rise in open interest on Friday, 3.5% rise in price at 1071. The stock's completely overheated, so one would need to sort of pause and then maybe wait for it to correct, but the rally is unrelenting and very, very fast. Apart from Lupin and Cipla, of course the market favorite there is Aurobindo Pharma, multi-month high, and that's how the entire pharma space is placed. Open interest in Aurobindo Pharma wasn't much on Friday, but the stock is certainly at a record high. And what is coming back into the market, Tanya, is the entire IT pack. So very strong move on Wipro, 2.2% higher, and decent rise in delivery statistics. But it's the short covering that's helping the entire IT space. So Wipro, HCL, Tech, especially Tech Mahindra. These are the three counters from the high beta space for IT, and the three pharma counters from the high beta space within the drug sector. And there is one more, which is Torrent Pharma. Very strong numbers coming here. Record high at 2071, and it's a cut in open interest, so it's a short covering that's happening, and the stock's super bullish given the delivery statistics and how it's placed on the charts. Tanya.
Okay, that was the F&O data for you. But now let's talk about global markets as well. So Wall Street closed lower on Friday after report of slowing US labor market growth, and all three major indexes posted weekly losses, as investors braced for more possible downside surprises a day after disappointing earnings from Apple. Now the Dow Jones fell around 150 points to 35,065 level, and the S&P 500 also lost around 23 points to 4,478 odd level, and the Nasdaq Composite dropped around 45 points. Oil is another factor to watch as prices, extended run up for the sixth consecutive week on fight supply and on tight supply and improving demand outlook. And Asian markets, if you see, they are also trading largely in the positive note. So what is now essential to track from overseas cues, Shail?
Tanya, you hit the nail on the head. It's crude oil. At 82.78, we are at the highest level since 12th of April. So definitely, a 4-month high on the prices, and it was at $67 to a barrel on 28th of June. So this is also hurting sentiment on the Wall Street, because higher oil prices is not something that bulls want to digest in the short to medium term as far as equities are concerned. This is definitely a worry. And of course, we'll have the US inflation data coming in on Thursday, in sync with the RBI monetary policy. So these are the two things that I'm watching. Just like the Indian markets, the US indices are also in a sideways to weak consolidating trend. Dow Jones is still above 20. As you mentioned, Apple earnings, they've hit sentiment on Nasdaq as well, slips below 20 EMA, and it's the SPX and the Russell 2000 which are sort of also on a weaker footing. So it's a global sentiment, Tanya. Unless we have the US inflation data coming in by Thursday, I think markets even in the US Wall Street would be flat to weak. Tanya.
Okay, absolutely. That was the action as far as global markets are concerned. Now we also have with us our guest and Devin Choksi, who is the MD of KR Choksi Holdings, joins us right now. So Mr. Choksi, very good morning, and thank you so much for taking the time and joining us here on Business Today Television. So I want to begin by asking, as Shail was also pointing out earlier, we had a fantastic run up, and then markets changed direction, and on Friday we saw a bounce back. But what's really next for Indian markets, and how are you approaching markets at this point in time?
Good morning, Tanya and Shail. Happy to be part of your show today. Definitely, I think the overall fundamentals of the economy, they remains absolutely very convincing, and they are on a very high note. Of course, market has a tendency to run faster than the economic fundamentals and the corporate earnings, which is what it has been doing for some time now, largely because of the fact that higher amount of liquidity inflow has been into the system. And we have seen in the last month a significantly large amount of money which has, I think, entered into the system, almost, if not more, close to 10 billion US dollars. Now, this is where probably I think the lady is being fueled with the larger sum of money. And as I see it, the flow of money can probably stop, I think, for 1 or 2 months if at all market turns up in hurry. But eventually, if the correction happens in the market with the price, or the time correction, as you know to call it as, the flow of money will continue to come in. Fundamental factors, the consumptions are increasing. The government's balance sheet is improving significantly. I think the amount of tax money that they are collecting is basically not seen before in last whatever number of years since we have been watching the market. At the same time, corporate earnings are absolutely remaining confident and robust. Previous years, I think the corporates haven't been expanding the capacity. Now the corporates have started putting the capacity into the higher track as well as the growth is concerned, so that is being assured. Overall, I think the global economy seems to be, I think, stabilizing, and the rate hike cycle is probably, I think, likely to be ended, I think, sooner than later. So all these perspectives put together, my reading says that India as an emerging market remains extremely favorable place for lots of investors globally, and that is where we are seeing this particular rally continue. So I would be very happy if the price correction or the time correction takes place in the market because that gives a phenomenal opportunity to buy afresh into the market in the portfolios.
Okay. Devin bhai, good morning. It's always such a pleasure to host you and your very, very practical and simple views on the market. I'm just keen on finding out a couple of stocks that you would be looking at. The market has decently corrected from record highs, especially the bank nifty. Anything that catches your eye in the banking space which might be in the buying zone, and especially pharma? We've seen a fantastic rally coming back on this particular sector. What is on your radar?
Good morning, Shail, and always pleasure as well, I think, to be part of the show. Well, I think the important part about the banking sector, you are seeing the corporate lending book is growing. For public sector banks, it is growing at around 15, 16, 17%. For the corporate banks, it is growing at 20%, which is suggesting that I think this amount of money that is getting infused into the system is gaining a larger amount of traction for the banking sector. On the other side, retail credit is unstoppable. I think the consumption limit is probably going to the roof. I see most of the consumption-oriented teams are working in the country. So retail credit is also growing in excess of 20%. Housing finance credit is growing in excess of 20%. Prime sector is growing about 10%. So in my viewpoint, I think if each and every sector and sectors are firing at the same time, banking sector probably would remain relatively, I think, more comfortable place going forward as well. Because I think from $3.5 trillion, if the economy has to move to $5 trillion and then the $6.57 trillion in next 3 to 5 years time, I would think that I think this is where probably banking companies with a larger balance sheet will remain, I think, extremely attractive proposition. And that is where I place HDFC Bank as the first priority in the portfolio list. Because I guess I think the 20 to 23 lakh crore AUM would probably translate into 45 lakh, 50 lakh crore AUM in next 4.5 year time. Now, if this is the size of the balance sheet that we are talking about, in my viewpoint, I think the market capitalization will soon catch up. And that is where probably a good amount of money to be earned from larger stocks. These kind of companies generating 20-25% return on a yearly basis, I think is a very good proposition to have in the portfolio. Similarly, I think the likes of Axis Bank, likes of ICICI Bank, they all remain, I think, relatively more favorable. Bajaj Finance, to me, I think remains absolutely convincing pick given the kind of strength that this particular company is having. And within the mid-cap space, I think even Poonawalla Fincorp, that is also remaining relatively, I think, more strong proposition. So I have not selected public sector banks in this particular space, but these 4 or 5 banks in the portfolio could possibly give you relatively a smarter rate of return going forward. That is what my take would be.
Devin bhai, let's talk about Poonawalla Fincorp for two reasons. One, amongst the prices that you mentioned, although the stock is at a record high, but given the way how retailers work, they are very keen to buy stocks which for them are affordable compared with the names that you've already mentioned. So what exactly do you prefer within Poonawalla that Despite record high levels, you recommend this so strongly at about 418, 419. This was Friday's close. 32,000 crores in market cap, about 2,600 in terms of revenue, and 770 crores has been the trailing 12-month revenue. What do you like here?
So the one of the strongest possibility that one is basically encountering in this counter is around doubling the size of the EUM from current levels. Each of the verticals in which they have been extending credits, uh, there are two things which are happening. They're using the fintech at the front, and they're processing credit in the at the enterprise level by using the digital platforms. So, which means that I think you're efficiently processing the credit. In that sense, I think you're bringing down the cost of funds at the same time, and more importantly, you're lending money in time to the borrower, which is through the fintech in the at the front. That is giving a good amount of sustainability to this particular business. Remember well that everybody is having today the advantage of technology. And the companies which are basically creating the processes, integral processes between the back end and the front end, in my viewpoint, I think that is the first sign of this company sustaining. And that is what is more important. Like you asked me this question that what is giving me the confidence? Of course, the size of the AUM getting doubled, that gives me confidence. But at the same time, sustaining the power of growth is extremely important. And that is what I guess I think in this company we are likely to experience. They have been demonstrating right kind of abilities as far as moving in the direction is concerned. Plus, I think asset liability management activity in NBFC business is extremely important. Again, here this company is using smarter tools in managing the asset liabilities well. As a result of which, I think we are likely to see again the sustained growth continuing. Rest of the aspect about the credit and the credit growth in each of the verticals, I guess I think the India is giving phenomenal opportunity to all the lenders. I don't think that I think any lender is at a disadvantage vis-a-vis the other. Everyone is basically having a similar advantage. Fortunately, RBI is giving a proper framework for growth. And as a result of which, I think most of the lenders are having equal amount of advantage, if not more. How soon, how fast they prioritize the growth, I think is more important. That is why this company looks, I think, reasonably promising to me. So maybe if one has seen the growth model of Bajaj Finance in the last 15 years, some similar kind of a traits are available in Poonawalla Fincorp. And that is where I believe that any corrective price in the market could be a good opportunity to buy the stock in the portfolio.
Absolutely. We've seen the name change happening in this particular stock about 2 years ago. The Poonawalla Group buying 62% stake. And Devan Bhai, I am looking at the shareholders in this particular company. Lots of good names that you can think of. This Bank Muscat India Fund. There is Amansa Holdings at 2.5%. And if you look at the fund houses that are invested in this Poonawalla Fincorp, you have Aditya Birla Sun Life, Nippon India, Bandhan Mutual Fund. And the good part is that in terms of the top 5 holders, apart from one particular fund, all 5 have increased their stake in the quarter that ended June versus the March. So sequentially, lots of strong institutional investors have increased their stake in Poonawalla Fincorp, and that's also borne out by the 3-month performance of this particular stock, 29% higher. Devan Bhai, NBFCs have gone from one end of the spectrum over the past 3 months. You know, the moment RBI paused its rates in April, we've seen rallies like Poonawalla happening across the board in the NBFC space. Apart from Bajaj Finance and Poonawalla, is there anything else that catches your fancy in the NBFC space?
So honestly, I think I haven't been looking too deeply into the smaller banks, the small finance bank, the microfinance institutions. I don't look at those companies very seriously because of one reason that currently they are probably working with a huge amount of spread, and that is where I think one is giving them a premium. I think that would not be the reality going forward because the cost of fund to one and everybody is basically, I think, available at the same price almost. I think 7 except some percentage here and there. But at the same time, I think if everybody is also having the ability to reach out to the end customer with a fintech abilities, in my viewpoint, I think for the SFBs and the MFIs, the larger amount of NIM that they are enjoying currently, the spread that they are enjoying currently, they may not sustain over a period of time. And that is where I see a structural issue coming up at some point of time into these companies. Currently, they are lending it to unorganized sector, smaller ticket loans. Everything is more because of, I think, their ability to remain present into the rural area. But moment you have the geo financial kind of players entering into the market with a smartphone in their hand, probably the bank branches are not going to be required in the rural areas. On the contrary, I think we are likely to see higher amount of digital lending abilities, which I believe that Geo Financial Services or Bajaj Finance, or even now Poonawalla kind of companies, they are basically possessing. At the same time, some of the fintech platforms are also possessing this ability to reach out to the end customer. So in my viewpoint, I think I would stick to the larger names, and also because of the fact that I'm firmly believing one aspect that if the country has to grow to $10 trillion economy or $10 trillion kind of an economy, and then the market cap along with the big is going to get bigger. So it is better to bet on the bigger guys as far as banking space is concerned,
Right.
because I think they are moving at a faster pace.
Absolutely. That's wonderful advice. The last question on Poonawalla FinCorp, Devan Bhai. Of course, at about 418, 419, the stock is overheated at a record high. What would be the best buy zone according to you if one needs to add this particular stock in the longer term to their portfolio? And maybe a 1 year or a medium term, 2 to 3 year target on FinCorp, Poonawalla FinCorp that you have?
Uh, Sahil, I think in this market, the liquidity drives the premium valuation. That is one thing very sure. And we all understand that I think the price is basically going up largely also because of the fact that I think too many funds, as you rightly mentioned a while back, are chasing the stock in their portfolio. So in my viewpoint, I think I don't expect very deep cut correction into this stock. If you are lucky enough in getting putting 5 to 10% kind of correction in the price, that would be decent enough one to get inside the company with a view that I think this company could appreciate, I think, at the rate of 20-25% on a CAGR basis for next 2 to 5 years.
Okay, that was a wonderful discussion on Poonawalla FinCorp by Devan Bhai. He recommends holding this stock in your portfolio. Given the excessive liquidity in the market, it's unlikely to correct. But if it does, then do add it to your long-term portfolio. And as always, take some extra financial advice as well, apart from the fantastic one that Devan Bhai has given. Pre-open markets are there in front of us. I will let the Nifty settle to a more decent number and then give you what the price is. Yes, it's back in the green, up 13 points, 19,537. So in sync with what the GIFT Nifty said, State Bank of India, Tanya, is the top gainer, 2% higher, 585. Remember, stunning earnings, and the stock did not react. That was something that was really uncalled for, but now it's showing a nice uptick. Similar gains seen on ICICI Bank, 1.9% higher at 994. Let's look at other stocks. HDFC Bank down 1%, 1635. Reliance flat, 2511. And we have Axis Bank down 0.3% at 949. So these are the 4 or 5 heavyweights. I want to check what Infosys is doing. 0.8% higher, 1389. Remember, it's the IT pack which is likely to do wonders today. Let's see other stocks in IT. How are they opening? I have some hopes on Wipro and HCL Tech. Wipro is up 0.3%, 410. HCL Tech is up 1%, 1155, and TCS is flat at 3443. Let's pay attention to FNO apart from the heavyweights. Let's look at stocks that are the top gainers. Okay, Mahanagar Gas up 10% post earnings, 1100. This will settle down. It's now up 1%. Okay, BHEL no let up, 2% higher, 101. Remember, this has been a high beta, high choice stock for a number of traders and investors that we speak to. M&M 2.3% higher, 1499. Tata Motors 1.5% higher, 624. Apollo Tires 1.4% higher, 443. Tanya, it's going to be an auto day today as far as the FNO is concerned. Let's look at the broader markets, NSE 500. And Tanya, the Nifty is now 51 points higher, 19,568. So the pent up buying that I was referring to, which was sort of unsatiated on Friday, is coming back in the market on Monday morning. KRBL, rice companies, 6% higher, 410. We have Paytm, 4% higher, 834. Remember, these are pre-open rates. These are the ones that I see. Zomato 2% higher, 97.70. So all high beta is in good shape, banking is in good shape, and a fresh start to probably reclaiming previous glories as far as Nifty is concerned. Tanya.
Okay, absolutely. Meanwhile, let's welcome Ashish Chaturmota. He's also with us now. He's the ED and Fund Manager at JM Financial Services. Thank you so much, Mr. Chaturmota, for taking the time out and joining us here on Business Today Television. So, all eyes will be on MPC decision outcome this week. But how do you see, I mean, where are the Indian markets headed according to you, and how are you approaching markets at this point in time?
Hi, good morning to both of you. So my sense is, we have already seen decent profit booking in last couple of, trading sessions, and the structural trend of the market is still quite constructive. Yes, there are concerns with regards to inflation and specifically the agri commodities, which are seeing some kind of, uptick. But I think, if you look at into the global markets also, there is some amount of profit booking, but the broader trend looks quite promising. And if you look at last, couple of weeks, the kind of FI inflow we have witnessed in the last 3-4 months time frame, it looks like this trend is going to continue, and that's the reason we believe it's going to be more buy on dips market rather than we should worry about a deeper correction. So my sense is, if you look at the long term charts of the market also, 19,200, 19,300 is going to be a very, very strong support zone for the market. And if we manage to sustain above these 19,200 on a closing basis, then my sense is there could be some consolidation here and there between 19,200 to, let's say, 19,650 kind of zone. But once we see this consolidation getting over and eventually market crossing 19,650, my sense is we are heading towards a new all-time high kind of trajectory. To support this, if you look at banking, we have seen some amount of correction, but I think this is more, more like a short-term correction. But the overall structure of banking is quite positive. If you look at the credit growth momentum, if you look at the NPA, NPA numbers, or if you look at even the kind of valuations we are witnessing in a lot of these private banks, and specifically about PSU banks, which are trading below one time price to book, there is a lot of comfort in terms of the valuation of banking as a basket. Shailji was mentioning about IT. So IT, has been seeing a lot of correction in the last 1.5 years time frame. But if you look at in a very short span of last 3 to 4 weeks time frame, we are seeing some decent consolidation happening in IT. So I think there is a very strong stability which is coming to IT names, and that will give a lot of support to the broader market, because it has almost 14% weight in index. So this gives us comfort that at around 19,200, 300, markets are going to witness a lot of strong support.
Right. Ashish Bhai, good morning and welcome to BTTV. It's always a pleasure to listen to your practical and very profit-making views. Let's get to stocks. Tell us the two best technical charts in the market as of now. We've corrected fairly decently both on the Nifty and the Bank Nifty over the last 2-3 weeks. So prices have moderated. Tell me what looks good on the charts.
So yes, two names, Shelji, and both these stocks we like and we hold in our portfolio, and we believe these are structural trends. So one is Policy Bazaar. We mentioned about Policy Bazaar in your show almost a month back, and we have been maintaining a positive about this both these names in the new age businesses, which are Policy Bazaar and Zomato. So Zomato has turned profitable, and we saw what kind of massive positive reaction market gave it once it showed numbers, and that's the same trend we are witnessing in Policy Bazaar. We discussed about the long term charts last time in the stock. We said there's forming a good rounding bottom formation on the weekly, monthly, and even the longer term chart frame. We are seeing decent amount of traction in terms of the delivery activity which we are witnessing in the stock. So my sense is, Policy Bazaar has formed a very strong base around 730 740 zone. If we maintain this support levels of 730 on a sustainable basis, my sense is we are heading towards 900 to 1000 kind of trajectory in coming few months. So I think it's a positional trade which looks very promising from a medium to long term perspective. If you look at the growth of insurance as a sector, it is growing around 14 to 15%, but Policy Bazaar per se is growing at around 30% kind of growth rate. So this gives us a very strong visibility that the kind of insurance penetration we are going to witness, Policy Bazaar would be the biggest beneficiary of this mega trend which is going to emerge on the insurance as a basket. My second bet would be stock which we again like and hold in portfolio is Shriram Finance. So Shalji, you're mentioning about
let's discuss. Ashish bhai, let's just discuss Policy Bazaar in a bit here. Remember the issue price for Policy Bazaar was 940 to 980. In fact, 980, and the stock really has outperformed the broader market. If you see from the lows of about 391 in the beginning of February, we have a price about 781. So that's a phenomenal rise that we've seen. Remember the all-time high for this stock was about 1445, but that was after the very strong response in IPO, and then the stock had tanked. So Ashish has this knack of picking up stocks which do some great calisthenics on the chart, and distinctly I remember about 1 month ago when he had come, the stock was about at 650 and now at 781. What's the medium term outlook here, Ashish? Do you see 4 digits coming, or at least the IPO price?
Yeah, so that's what I mentioned. At least in the immediate medium term, I'm looking for 1000 kind of trajectory in the stock. But I think it's more like a structural story because insurance penetration is at an extremely low level. We are going to see a lot of traction there, and Policy Bazaar would be a biggest beneficiary of the trend. So my sense is, it's more structural. If one holds it for next 1 to 2 years time frame, I see very strong possibility stock should eventually cross its previous all-time high, which is around 1450 to 1500 kind of trajectory. So this gives us a very strong visibility that at least in next 2 years time frame, stock should positionally give a CAGR of almost 30% kind of CAGR in terms of price appreciation. But at least in the medium term, I'm looking for 1000 kind of levels in the stock, which implies good 22% kind of upside.
And Ashish bhai, your second stock?
So second stock would be stock like Shriram Finance, and as I was listening to your discussion, you are talking about Poonawalla. We also hold the stock, and we really like the structural trend which is emerging in stocks like Poonawalla, which are beneficiary of obviously the NBFC space, but also about fintech. And I think if you look at the other pick which we like at this point of time is Shriram Finance. And if you look at the valuation of Shriram Finance, it is at a very comfortable zone of one time price to book versus if you look at the peers trading at almost 3 to 4 times price to book. Obviously, because of the strong credit growth the peers are witnessing versus Shriram doing almost 17-18% kind of loan growth. But looking into the valuation of almost one time price to book, it gives us a lot of comfort at these levels that Shriram Finance could be a structural trend. And if you look at the long-term charts of Shriram Finance, it has been consolidating for almost, I would say, a good 4 or 5 years. And in the last 2-3 months post specifically this selling, we are witnessing some kind of price appreciation, but it gives us comfort that at one time price to book, and with almost 4 or 5 years of consolidation, now Shriram Finance is poised for a decisive move. We are looking for a target of 2100 to 2200 in next 2-3 months time frame in Shriram Finance, and there is a very strong breakout which has happened around 1750 levels. So 1750 should be looked as a very strong support for Shriram Finance, whereas on upside I'm looking for an upside towards 2200 levels in the stock.
Wonderful discussion happening on the entire NBFC space, and despite a record high on Shriram Finance, as Ashish mentions very succinctly, it's an undervalued stock. You will not believe the PE. It's sub 12 in a market which is near record highs. The price to book is 1.5, and if you look at the 10-year average PE for the company, the price to earnings, like I mentioned, was 11.76, and the average is 14.55. So the company is quoting at a lower valuation than its own 10-year average, both on price to earnings and on price to book, which is 1.53 versus a 10-year average of 1.75. Earnings yield is 9.6%, and the stock on average has compounded at 11% over the last 10 years. Remember, as Ashish says, it is only now that after so much of consolidation that a very strong breakout has happened. A lower valuation on Shriram Finance obviously means that institutional players would be looking at the stock, and at a market cap of about 68,700 crores, the company has a revenue of about 29,000 crores on a trailing 12-month basis, and a net worth of about 43,000 crores. Trailing 12-month earnings are about 5,800 crores. So these are the two stocks that Ashish recommends: Shriram Finance and PB Infotech. And there is one more excellent news that Tanya has on Paytm. Over to you, Tanya.
Absolutely. So, Shell Vijay Shekhar Sharma, he has entered into agreement with Ant Financial to buy its 10.3% stake in 197 Communications and post the transaction, and will cease to be the largest shareholder in the fintech payments platform Paytm. So, okay, you can see the action in the pre-open trade. The stock is up to the tune of 8.5%. So, clearly positive impact on this particular counter, Shell.
Yes, Tanya, and it's one of those days when you have probably the best technical analyst on these three stocks, Zomato, PB Fintech and Paytm with us. I'll just come back to Ashish. The markets have opened. Let's just pay attention to these trades, and then Ashish bhai will take a view on Paytm with you. Top gainer, 9% higher, 870. Tanya spotted it really well. Now let's get into the Nifty. Up 31 points, 19,545. Bank Nifty flat at 14,902. Let's look at stocks that are outperforming, and within the market watch space, which is the top gainer. It's Bajaj Finance up to 0.2% at 7165. I am looking at Reliance 0.3% higher, 2519. HDFC Bank 0.3% higher, 1657. Infosys 0.3% higher, 1382. Axis Bank flat at 953. State Bank of India flat at 573. That's a bit of a disappointment. ICICI Bank flat at 971. Bank Nifty now up 60 points, 44,945. And Nifty up 57 at 19,577. Let's move very quickly to the F&O space and see what stocks are outperforming. IEX 1% higher, 128.40. What are the top gainers? ICICI General Insurance 4% higher, 1420. Hindalco high beta 1.2% higher, 462.90. Canfin Homes back in the green, 1.3% higher, 743. Ashish's favorite Birla Soft 1% higher, 443. Let's look at what else is buzzing. Apart from this, let's go to where the real action is now. Paytm 9% higher, 871. Sterlite Technologies 7% higher, 163. HFCL 6% higher, 70. Zomato 3 digits, very close to 4% higher, 99.70. Mastock 2.8% higher, 1897. These are very good rates. Let's get to Ashish Bhai immediately. Ashish, what would you do on Paytm?
So I think now there is a very strong renewed buying interest which has come to the new age business, specifically post Zomato's number. I think there will be a lot of interest, and specifically this news will create a buzz. So my sense is Paytm is headed towards four-digit number. So I think eventually the stock should hit 1,000 kind of trajectory. It is up almost 8-9%, but I think around 840 there is going to be a lot of interest which will come into the stock. So use this dip as an opportunity to get on the long side of the stock. So my sense is stock has formed a very strong base now around 800 kind of levels, and 830 to 840 would be a good area to accumulate the stock. In the medium term, I think I'm looking for 1,000 kind of trajectory, but we need to understand, Shelby, this stock was almost 2,000, 1,900 kind of levels immediately after its listing, and still at 860 we are getting the stock at 50% discount. So my sense is there's a lot of scope. This 1,000 should only be looked as a short to medium term target, but if things go out in the right manner, my sense is technically the stock is moving towards 1150 1200 kind of levels in next 6 to 7 months kind of time frame.
Right. Paytm is the top traded counter in India so far. 224 crores worth of transaction happening immediately, 9% higher, 28 lakhs shares traded. The three stocks that we've discussed today, Poonawalla FinCorp, this was Devan Bhai's pick, trading at 428, fresh record high coming in as far as Poonawalla is concerned. Let's look at Ashish's picks. He had mentioned PB Fintech. There is no doubt in my mind that given the rub off, this will also start doing pretty well, 774 at the moment. And of course, Shriram Finance is what the three stocks that we had discussed, 1845. It's a runaway rally in the broader space, Tanya. Ashish's favorites, KPIT 1180, Zomato 3 digits. Tanya, over to you. What else have you seen?
Absolutely, Shail. Let's discuss, some stocks that will be news on the back of earnings as well. So we have Bank of Baroda. Let's pull up the stock for you. So the bank net profit rose around 88% to 4,070 crore rupees in the first quarter, and net interest income also grew by 24%. So that stock will be in focus, and clearly a negative impact on this particular counter. Street not liking the numbers as we speak. 188 level on this particular stock. Delivery, that stock should come up for you, and we were discussing this new age tech space, and this stock will be in focus on the back of numbers. Now the company saw its losses narrow significantly in the quarter, in the first quarter, and the net loss narrowed to 89.5 crore rupees. So let's see how the action pans out, but right now the stock is trading flat. 421 is the level where we are at. And some of the other stocks, Balrampur Chini should come up for you. That stock posted, that company posted a net profit of 69 crore rupees in the first quarter. So on the back of this news, this stock will be in focus, and of course Reliance, we will keep an eye on that particular stock as well. So Geo Financial is expected to be listed soon, and the company said that it seeks to propel its recently carved out unit into India's largest non-banking lender. So flattish note, the stock is trading right now at 25-23 is the level where we are at, but these are the stocks that will be in focus. Shell.
Let's get back to Ashish. Ashish, your view on Poonawalla FinCap, 430 fresh record high. What would you do, and what else have you noticed?
So we have been holding the stock in our portfolio, Shelby, and we really like the stock with almost 4.5% return on asset, with almost 40% kind of growth we are going to witness, and with strong pedigree of management and low cost of funds makes Poonawalla a very attractive bet in this space. My sense is, technically speaking, if you look at the stock has been was consolidating for good 6 months, and it gave a very decisive breakout about 340 levels, and that's the reason now we are witnessing almost a good 28 to 30% kind of upside from those levels. But since the kind of growth momentum we are going to witness in the stock, my sense is 480 to 500 is what we are looking in the immediate short to medium term time frame. Since the stock is in a strong price action momentum, my sense is on an immediate short term basis 410 is going to be a very strong support zone. Keeping this in mind, I think 480 to 500 is what we are looking as a short to medium term price target in Poonawalla FinCorp.
What else is catching your eye, Ashish bhai?
So, yes, so I think as you mentioned about new age businesses, this is one space which looks very good. My sense is, as I mentioned, I would like to re-emphasize about my positive view on Policy Bazaar. In the auto space, I think Balkrishna Industries posted its numbers. It saw some reaction, but now forming a very strong base. My sense is 2440, 2430 is going to be a very strong support zone for Balkrishna Industries. Stock is looking good for almost 2600 kind of trajectory in a shorter term time frame. And I think one more stock, Shelby, we should not miss is NTPC. We discussed this stock at 200 levels 4 5 days 5 6 days back on your show. It after that it gave almost 10% upside, and in the last 3 days we have seen some consolidation. So we have seen a profit booking from almost 227 to 219 218 kind of trajectory. My sense is stock has formed a very strong base at around 217 kind of trajectory. So it is offering a very reasonable risk reward at current levels. I think stock is poised for a move towards 240 250. We mentioned about the fundamentals where we said that the stock is available at one time price to book, and we are seeing very strong traction in the renewable segment. So I think almost 60 gigawatt capacity is where NTPC is heading, and that will give a lot of capex growth in the NTPC, and with reasonable valuation of one time price to book, strong dividend yield. And I think I think if you look at technically, this is a breakout of after almost 12 13 years of consolidation, so which gives us a lot of comfort to buy the stock at current levels of around 219 to 20 zone.
Right. One of those rare stocks where you see growth both in terms of financials, growth in terms of demand because of power consumption in India, and of course a 14-year breakout on the charts, and the stock is still affordable relative to itself, and of course relative to the market. That is what we are getting on NTPC from Ashish bhai. In some while, we'll get you some more information on Paytm. It is now the second most active trade on the NSE, about 335 crores worth of transactions happening. Remember, it was initially had moved at about 870, I think that was the highest. No, 885. It's now slipping a bit, that's okay. But some great moves coming in on the back of news that the current promoter, Mr. Vijay Shekhar Sharma, would be buying a 10 percentage point stake from the top holder, which is Ant Finance. We'll be getting some more information from on Paytm. Let's wait for that. And at the same time, we'll also touch upon some other stocks since Ashish bhai is here. Ashish, your top pharma pick?
So I would go with Sun Pharma. My sense is structurally very strong. Specialty business is doing very good. We are seeing good generic pricing pressure in US coming down from a double digit to low single digit, and that gives us a lot of comfort with Sun Pharma. If you look at the stock's price behavior, we have still not crossed its 2016 due to 2015 all-time high of almost 1200. So this is almost, I would say, after 8 years of consolidation, Sun Pharma is trying to breach those resistance zone of almost 8 years. And looking into the recent price performance, where stock has been consistently making a very strong higher top higher bottom on a weekly chart frames, it looks a very strong possibility stock which it will eventually cross 2015 all-time high of 1190 kind of trajectory, and eventually should hit 1250 to 1300 kind of zone. So my sense is this could be my top pick with a stop around 1110. But Sun Pharma is poised for at least I would say 7 to 10% kind of upside from current levels.
Okay, absolutely. And what are your thoughts, Ashish, on Lupin? Let's pull up that stock.
So yes, I think Lupin looks very interesting and a very severe underperformer in the entire. I would say even within the pharma also it significantly underperformed. But if you look at the last 6-7 weeks, we have been consistently making a very strong higher top or bottom from 750 to almost 1080. But since the stock made its all-time high around 2200 in 2015, still the stock is at 50% discount to those price levels. So my sense is there's going to be a very strong catch-up rally, since we are quite constructive about entire pharma as a basket. So my sense is with 1040 as a strong support zone, it looks like Lupin is headed towards 1250, 1300 kind of trajectory. And just to to re-emphasize, we mentioned about pharma bees as an ETF which should be looked into current market environment, because if you look at this index, in 2015 it was at around 14,000 kind of trajectory. Even after almost 8 years, it is still at 15,300. So we have hardly seen 10% kind of upside in the last 8-year journey. So this gives us a belief that after 8 years of consolidation and with strong underperformance to broader markets, pharma as an index is going to see a very strong traction. So pharma B's ETF should be looked as a medium to long term bet in your portfolios.
Okay, absolutely. And what about Aurobindo Pharma, Ashish? Aurobindo Pharma, if you look at the stock, it has significantly recovered from its 52-week low as well. What are your thoughts on this particular counter?
Again, a very strong pattern with pole and flag formation on the daily chart, and on a weekly charts it is forming a very strong higher top higher bottom structure. The stock has been in a range of almost 1000 to 550 for good, I would say, 7-8 years. So now I think at least in the immediate short term we are looking for 1000 kind of trajectory, which was a previous resistance zone, and we have seen this resistance zone almost holding for good 5-6 years. So I think Aurobindo Pharma could see good 10 to 15% kind of upside from current levels. Stock has formed a very strong base around 820 levels. So keeping this in mind, I think Aurobindo, and if you look at the OI positioning of the stock, there is a lot of short buildup which was there in the stock in last couple of years. So we are going to see very strong short covering coming even to Aurobindo Pharma.
Okay, absolutely. And Ashish has clearly mentioned that pharma ETF continues to be one of the great buys. But Ashish, any other stocks from the pharma pack that are on your radar, especially after the first quarter numbers?
So yes, I think as we mentioned, Sun Pharma, Lupin. I think there are certain names in the API segment, or in the which looks quite promising. And within that, I think Divi's Lab is looking quite constructive. Stock has formed a very strong base on the weekly charts between 3,400 to 3,650, 3,700. Now we are sustaining above this 3,700 mark. So my sense is there could be good price action which could be witnessed in Divi's Lab with strong support around 3,650. My sense is Divi's Lab is heading towards 4,000 kind of trajectory in the shorter term time frame.
Right. Let's take a recap on the market, Tanya. It's at about 9:30, and the Nifty sadly is not building up to its morning gains. We've seen 19,580 as the most immediate high today. That was in the first 5 minutes of trade. Now at 19,535, although still in the green. Bank Nifty is slipped in the red, 32 down at 44,839. Remember, the market is now completely and totally focused on high beta given by this news on Paytm. It's the top traded counter, 433 crores worth of shares traded. We'll bring you some exclusive news again. 7% higher, 852. Zomato's up 2.2%. Again, 400 crores worth of shares traded at about 97.40. Everything on high beta is in the green. Nika 150.90. Delivery up in the green. Let me just show you these prices. I track them on a different platform completely. Just one moment. Oh, okay, here's high beta and here are the net changes. Okay, Paytm 7% higher, 851. We have Nika which is trading 3.5% higher at 150. We have Zomato 2.25% higher, 97. Delivery is down. Okay, not a problem. And for some strange reason, Policy Bazaar is giving you an opportunity. Remember, 1% lower at 775, and of course we have Paytm being the top traded counter here in terms of volume as well as price. Tanya.
Okay, absolutely. And also, since we are discussing, this new age tech space, Shell, why don't you tell us about Zomato, Ashish? What are your thoughts on this particular counter? Because we saw, in Friday's trading session, the stock was on a roll and it posted a profit of 2 crore odd rupees. So, your thoughts on this particular counter, and is it the right time now to buy and, to buy this counter?
Yeah, so as a disclosure, we are holding this stock in our portfolio.
Okay.
So both these names, Zomato and Policy Bazaar, we have been liking in the new age businesses, and still we believe the growth trajectory is very promising. Considering Zomato is not just into food delivery, but also into groceries, into, I would say, there are other multiple segments which are working in Zomato. And since the company has turned profitable in this particular quarter, markets are going to be very constructive about these names. My sense is, from a price performance perspective, if you look at the all-time high of Zomato was around 170, still quoting around 97. So it's a very strong discount in terms of price when it got listed in 2021. So my sense is stock is looking quite positive with the growth possibility, and on strong technical charts it looks like we are headed towards 115, 120 kind of trajectory in the short to medium term. But considering the medium to long term, it looks like stock is poised for a move towards 140, 150 kind of trajectory in next 5 to 6 months time frame.
Right. Let's come back to Paytm, and we have some breaking news coming in. Siddharth Zarabi joins us, Managing Editor, Business Today Television. Siddharth, over to you.
Morning, Shail, and very clearly the news on Paytm supportive of the stock. But more than that, I've been speaking to sources close to Paytm and Vijay Shekhar Sharma to get a better sense of what lies behind this strategy and hiking stake. As we know, over the years, as Vijay Shekhar Sharma funded this company through a spectacular and in a way expensive growth phase, his stakeholding had reduced. But as we know, Vijay Shekhar Sharma is buying an additional 10.3% stake in company from Antfin, which was the single largest shareholder at 40%. Progressively, their stake has come down and will stand at 13%. The key news point is Vijay Shekhar Sharma is back in control because he is now going to be, upon completion of this transaction, the single largest shareholder in Paytm. He will have full management control, and Antfil will no longer have a board seat, no longer has a board seat in the company. The financing of this structure, if that's something we can add to the conversation, Shell, is through a zero coupon optionally convertible debenture, and no shares, no income bonds is being created for this. Clearly, this could also pave the way for further enhancement of stake in the future, although we don't have any uh, confirmed views on that. But that's the news. Vijay Shekhar Sharma, a poster boy of payments and one of the earliest pioneers of fintech, now firmly back in the seat. He was always there, but with far more ammunition and backing as the single largest shareholder and the person who will continue to drive the company. And Shell, as I wrap up, I'm just thinking of some of the hero startup founders in our country and the kind of business cycles they have seen, their companies have seen, and many of them have flamed out. But I'm reminded of Vijay Shekhar Sharma in the context of young budding entrepreneurs who have very clearly, Vijay Shekhar Sharma has seen tough times, but has also roughed it out during those tough times. Back to you, Shell.
You are absolutely right. Right. You know, what doesn't kill you makes you tougher and better, and that's what Mr. Sharma has demonstrated. Let me just put 2 or 3 numbers behind what Siddharth has told us. So, an additional 10% stake by Mr. Vijay Shekhar Sharma will now take his shareholding to 19% in Paytm. Remember, the market capitalization of Paytm at the moment is about 50,000 crore rupees. So this is going to cost him a 5,000 crore tag as far as the pricing is concerned for this particular transaction. And Antfin, which is the Chinese parent which held about 23.8% stake in Paytm, its stake will now come down to 13%. Similarly, Vijay Shekhar Sharma's stake from 9.12% will now go to 19%. He becomes the top shareholder, and over a period of time since December 22nd, he has also raised his stake in the secondary markets, as the shareholding pattern is here in front of me. In September 22, his stake was 8.91%, and in June 23, it's 9.12% pre this deal. So given the 10% stake purchase, his stake will now go to 19.12%. And as Siddharth says, there is some possibility that you might see an additional transaction. Remember, this does not trigger any kind of open offer as far as the stock price is concerned, but a great day for the startup community, which has been going through a lot of pains as far as funding is concerned, and this comes as a top dollar purchase at the current market price. Siddharth, anything else that you'd like to add, please?
Well, I'm just looking at the broader picture, and we've seen uh, how the fintech space has evolved, Shell, and perhaps you would like to focus more on the point of the acquisition cost. If you look at Paytm's journey in terms of its share price value, at this time, the acquisition making sense from a financial point of view versus a peak valuation, Shell. What do you think should be the way investors should look at the cost that is likely to be borne by Vijay Shekhar Sharma for the additional stake buy?
Siddharth, let's talk about the broader space. If you look at how these stocks have moved, and after the initial disappointment, in fact, a huge disappointment coming in post IPO, the stock slumped to somewhere like 400-500 rupees from a peak of about 1900, which the issue price was, and similar things happening on PB Fintech, Nika, so on and so forth, delivery as well. Given the positivity that is surrounding Zomato post its first quarter earnings, where it announced a profit, Siddharth, I think we are headed in the right direction when it comes to stock prices, and the fact that you are able to buy a 10% stake in perhaps the largest digital potential and network in the world, which is India, at a mere 5,000 crore rupees. This is something dramatic that has happened, and the gentleman has voted with his money. he's put fresh capital where his how should I say, thought processes, and this is going to be a fantastic move. When a promoter buys out an existing shareholder, it sends a very, very strong message about the future trajectory of the business. Also remember that we've seen many such transactions happening in our time while both of us were reporting on telecom, where promoters bought out existing players, and we've seen that fantastic rally in the telecom space after that.
One more point, Shell, if I may quickly add before you
set a
wrap
base
this
price for
conversation up. Shell, just one quick point to add, uh, very quick one. With the Indian resident promoter back in the saddle and perhaps progressively to increase the stake, please look at the longer term future in terms of going beyond just fintech NBFC to a regulated entity. Uh, it would never have been possible with a Chinese company or Chinese backed entity in the driver's seat. I will just leave this hanging in the air that if you fulfill some of those norms, who knows what the potential future could be from a not from a North Block point of view, Raisina Hill point of view, but from a Mint Street point of view, Shell.
Yes, Siddharth. These are much broader policy trends which you track better than me. Uh, uh, you know, I don't want to say this aloud, but the fact remains that there is this move in the market to buy back what we had. If you see how domestic SIP flows have come in, they've taken back a lot of shares from foreign institutional investors back into Indian hands. And a similar thing is happening in the startup space. My sense is that this is the first transaction that has happened, and you will see many more coming in. A similar thing happened on the MG transaction on the car side. If you remember, it's the Jindal Group that stepped into, sort of take the company into Indian hands. So all sorts of things are happening in this wonderful market on a daily basis, and it remains to be seen whether we'll see better days on Paytm as a stock price or not. Definitely we will. It's only a matter of time that, as Ashish was saying, you will see 4 digits. But this is the top news that's coming in today. Vijay Shekhar Sharma buys out a 10 percentage point stake from Ant Financial, which was the top shareholder, and he is now in the driver's seat when it comes to being the largest shareholder of India's most well-known fintech startup, Paytm. Tanya.
Shail, and that was Paytm for you, still holding on to the gains, 7% up as we speak. But it's and thank you so much, Siddharth, for sharing these wonderful insights. So it's the earnings season, and the company on our radar today is Five Star Business. So the company posted a strong growth in disbursements and total assets in a seasonally weak first quarter. We have the management with us, Mr. Rangarajan Krishnan, who is the Chief Executive Officer at Five Star Business, joins us. Thank you so much, Mr. Krishnan, for taking the time out and joining us here on Business Today Television. And I want to start with the stellar performance only. I mean, typically, June quarter tends to be muted for lenders compared to March, but the company posted a 43% year-on-year growth in AUM to 7,583 odd crore rupees. So what really led to this kind of growth, and is this kind of growth sustainable going forward?
So firstly, thank you so much for having me on the show, and it's a great day to be, live on the TV with the news of Paytm and Zomato's really rocking the markets. Generally speaking, Q1 is one of the dullest quarters for most of the lenders because you would have peaked up during Q4, and it takes time to pick back that speed. But I think what happened during last year was very atypical because FY23, as you will imagine, was the first full financial year post-COVID. So the entire year was great for Five Star. During COVID, we had only posted about 15% growth rate very consciously because we are a collection first company, always focusing on quality of growth rather than just quantity of growth. But during last year, we inched up the growth from 15% to about 37% for the full year. And that momentum sort of continued. So what happened during this Q1 is just that, whatever pent up demand was there, that momentum has continued and that helped us post a very, very solid quarter during the Q1.
Mr. Krishnan, welcome to Business Today Television. It's such a pleasure to host you. We'll start with your stock price. The IPO was at 474 rupees per share in November 2022, and you're doing such a fine job at 760, a record high. And it's been an exciting day. We've discussed NBFCs and no other stock. Before you came in, we were in discussion on Poonawalla FinCorp. Then we discussed Shriram Finance, and of course Paytm took it away when it comes to the top news of the day. Let's drill down into your numbers. Please tell us how much of your lending is now unsecured, what is the average size of the loan, and which geography and which sector are you seeing the maximum growth coming in from?
So firstly, we don't have any unsecured exposure. 100% of our book is backed by collateral. We broadly lend to three purposes. We give business loans, and we give loans for building houses, and we also give loans for meeting any significant economic expense that happens in a family. But across all the three end uses, the underwriting is the same, the collateral is the same. We take the self-occupied residential property of the borrower as a collateral. So in that sense, our entire portfolio of close to 7,600 crores, we don't carry any unsecured exposure. 95% of this entire portfolio is backed by collateral, which is SORP, self-occupied residential property, and the balance 5% is backed by commercial properties held by our borrowers. We are a dominant South player. We are headquartered in Tamil Nadu. We are a dominant South player. Today, close to 93-94% of our portfolio is coming in from South. But that said, I think over the last 4-5 years, we have consciously been making efforts to move beyond South. Today, we have a presence across 5, rest of India states, which includes Maharashtra, Madhya Pradesh, UP, Rajasthan, and Chhattisgarh. We are slowly expanding in these states. Our approach has been fairly cautious because lending is a very concentrated business. You need a lot of local knowledge, regional knowledge to be a successful lender. So we have been very cautious expanding beyond South. So our approach has been that whenever we expand beyond South, we firstly put up a few learning branches in each of the states. We wait out for those branches, from an experience perspective, and beyond 24 months of good learning, we decided to accelerate in that, in that state particularly. So if you look at the last 4 years journey, Madhya Pradesh was a great success story for us. That was the first, non-South state where we decided to expand. We had initially put up 4 branches. The experience was really good. Last week we opened our 50th branch in Madhya Pradesh. So, I think that's the template that we would like to follow on any state which is beyond the South.
Okay, absolutely, Mr. Krishnan. And all the cylinders of business, collections and profitability and quality have been good for this first quarter of this financial year. So have you revised your growth guidance if we talk about FY24?
Sure. We started our growth guidance for the year with about 30%. But I think given the strong Q1 that we have seen and the continuing momentum that we're able to see on the ground, we have revised our growth guidance upwards from 30% to 35%. We are fairly confident that, with Q1 clearly in track and whatever we are seeing in the months of July, that also being exactly in line with our expectations. This is a sustainable growth for the short to medium term. We have given a guidance of maintaining this growth rate for at least 3 years from now.
That's a wonderful potential growth there, Mr. Krishnan. How do you plan to achieve this? Is it via some inorganic route as well? Are you looking at smaller unlisted NBFCs that you would like to add to your top line, or will this completely be organic?
So far, I think during the 20 plus years of journey that we have had specifically on this product, the growth has completely been organic. From FY15 to FY23, we have clocked close to a 60x kind of a growth, and this entire thing was organic. We had not bought portfolios, we had not bought other companies, because it takes a lot to get a good quality portfolio, and we like to build that portfolio. So that has been the approach so far. But I think we are sitting on good net worth and good capital. The entire profits have been reaped back. We don't pay dividends, as a policy. So that said, I think we have the wherewithal to look at inorganic opportunities, but nothing on the table. We will be opportunistic if something interesting comes up, in adjoining spaces where we operate. But the 35% growth guidance that we have given to the markets is not keeping in mind any of the inorganic acquisition opportunities. We are confident that purely through organic means, we'll be able to clock 35% growth rate. And I think we are confident of doing it, largely growth levers, which comes through three aspects. The first is, of course, we'll put up at least 75 to 80 new branches this year. Last year, we put up 73 new branches. And in the first quarter, we've already added about 13 branches. So we are confident of reaching a 75 to 80 kind of a new branch setup this year. Predominantly, these branches will come up in the south. Maybe about 75 to 80% will come up in south, and 20% will come in the rest of India. This is the first lever of growth. The second lever of growth, as a strategy, we have always been adding more number of field officers in every branch that we have opened. It's a unique strategy, but what it helps us is that when you add more people to the same set of branches, that helps us penetrate deeper in our existing geographies. It helps us keep the portfolio quality really high. So that's the second lever, where we'll continue to add more people to our existing branches. And of course, the third lever, given where inflation is, we'll also expect some inflationary growth rate in the ticket sizes. Even if you take the ticket sizes, our ticket sizes today is about 3.5 lakhs per loan. One of the smallest ticket sizes from an average lending perspective across the secured portfolio of lenders in India. But of course, this will at least see some kind of an inflationary growth of 5-6%. So put together all these three levers, I think 35% growth rate is something that we are confident of.
Okay, absolutely, Mr. Krishnan. And currently 90% of five-star businesses disbursement and assets comes from the southern market, if I'm not wrong. And the company
Absolutely.
is planning to expand, to other geographies like MP, Maharashtra, Chhattisgarh, Rajasthan. So can you tell us, more about your expansion plans going forward?
So, today, to be precise, 94% of our portfolio comes from South and 6% comes from the rest of India. Like I said, the approach to expansion is going to be fairly cautious. We will grow aggressively in South, which is our strong markets. We will go extremely cautiously in, the rest of India markets. But I think the approach that we will follow is that we have identified at least 6 to 7 potential states where we can potentially expand. We will ensure that we are starting off with these states, and we will wait out for at least 18 to 24 months before deciding to press the pedal and expand aggressively in those states. So from an AUM growth perspective, you will continue to see South being the dominant part of our portfolio. I think from a guidance perspective, even if you have to fast forward about 3 years from now, South will still constitute at least 85% plus of our portfolio, with the rest coming in from rest of India. So the rest of India strategy is important for us, not for the immediate AUM growth, but it's important because 3 years, 5 years from now, we don't want to be in a situation where we still only know South markets. So we are using this time for the next 3 to 5 years to understand new markets, to build good teams there, to understand the nuances of mortgages in these markets, and be ready to accelerate growth in those markets maybe from 3 to 5 years from now.
Right. Mr. Krishnan, a final question. You've increased your guidance in terms of top line. Would you sort of pay some kind of attention to the net margin, which on a trailing 12-month basis is 38.7 and an EBIT margin of 69.25%? Would you be in a position to maintain these fantastic numbers, or will they improve?
Yeah, I think we have guided for a slight drop in net interest margins. More, it's because of financial structuring rather than anything else. From a inability to price perspective in the market, because we are under levered at this point of time. If you look at our leverage, we are hardly at about just 2 times leverage at this point of time. So as leverage picks up, which means you will end up doing more and more borrowing from the market. Your interest cost will go up, which is actually funded by equity at this point of time. So slowly you will start seeing that the NIMs will drop to an extent. But however, given the leverage being picked up, the ROEs will grow up. So if you look at even last quarter, there has been a slight drop in the NIM, not because we reduced the interest rates or our spreads got reduced. Our spread, incidentally got increased during the quarter. But however, with the pickup of leverage, there was a marginal drop in the NIM. That trajectory will continue over the short to medium term, and slowly the game will shift from ROAs to ROE. So with steady state NIMs of about 12 to about 14%. Today it's about 17.5%. It will drop to about 14%. But with leverage going up at least to 3.5, 4x, we are seeing ROAs settling at about 6.5 to 7% over the medium term. And from there on, we'll be confident of delivering at least 20% plus kind of ROEs.
Right. Thank you, sir. It's been a pleasure listening to your growth plans and also looking at the fantastic stock price at 763 today. Remember, the IPO was at 474. The company's come up with a fantastic set of numbers, and today's been a day where we've discussed more NBFCs than anything else. Thank you for your time, sir, and all the best for the coming quarters, both in terms of top line as also the margin expansion and of course net profit. Let's get back to the market, Tanya. Nifty is 32 points higher, 19,550, stuck in that zone. Bank Nifty is flat, 29 points in the green, 44,900. But what's really taking the cake today is the pharma space, and let me just tell you, there are some 12 pharma stocks. Let's first look at the index. It's obviously the top gainer, up 1.29%, 15,437. Remember, this is a record high. Let's drill down into the individual index level, and I believe which is the top gainer. Okay, on the index level, the top gainer is Sanofi, 74.39, up 6%. But let's look at what the markets prefer. Ashish spoke about Divi's, 2.4% higher, 38.36. Lupin taking it away 2.5% higher at 1,090. Remember, it's also the most active and the top traded pharma counter with 111 crores worth of shares traded. High beta is Aurobindo Pharma, 2.5% higher, 862. This is a multi-year high. Sun Pharma, 2% higher, 1163. This is Ashish's top pick in this particular sector. And we have the other high beta counters, Laurus Labs, trying to hit 400 at about 1.3% higher. Natco Pharma, 837. So these are the stocks that are going hammer and tongs after gains as far as the pharma space is concerned. Over to you, Tanya, for the wrap up.
Absolutely, Sharon. As we wrap up, let's not forget to mention Paytm again. The stock is still holding on to the gains. It's up around 7% as we speak, and we'll continue to get all the latest updates, whether it's Paytm or whether it's markets. So with that, it's time for me and my team to wrap up this edition of Market Today. Thank you so much, Shal, as always, for sharing excellent data and being with us here on Business Today Television. So with that, it's a wrap up, but stay tuned for all the latest market updates, and don't forget to follow us on our social media platforms like Facebook, Twitter, LinkedIn and Instagram. Do share your stock queries and stock feedback as well. So stay tuned, and many thanks for watching.